Hey, good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Thursday, July 5th. Hope you had a wonderful, safe 4th of July week, today, yesterday. It's not a weekend, unfortunately. But anyways, I hope you guys enjoyed yourselves and ready for another day of work here. So certainly it feels like a Monday. We're going to jump right into it today. We got ADP employment. So we got the employment numbers this week. This is for news, and basically last month they had 136,000 new jobs according to ADP numbers, and this month for June or 176,000. So pretty decent numbers here. That they're basically ADP reported that the private sector was reporting about 176,000 new jobs that were created for the month of June. So numbers that we kind of like to look at. We got the weekly jobless claims. On the other hand, the people looking to apply for unemployment. We had 388,000 right here, and from last week, we figured it would kind of be in that same range, 386, and it came down to 374. So kind of nice numbers there. Not as much below the 380 level threshold, so that's kind of nice to see right there. So positive numbers there. And then the next item to note is ISM services or non-manufacturing for June. And this is for May we had 53.7. So anything above 50 is again, if you've been following me, above 50 is an expansion, but anything below 50 it's kind of a towards contraction that they're pulling back on things. So we figured drop a little bit, and it dropped a lot more than we anticipate. So we dropped all the way down to 52.1. Unfortunately. So not so good right there. Now we'll just jump over to the headline news here. And basically the stock market's down right now. Uh, so they liked some of the economic news that were there, except for obviously the ISM. But some of this here is what the investors kind of looking at. We got China, we had the European Community, or European Central Bank, the Bank of England, all cut rates, and also Bank of England expands the quantitative easing program that they have in place over there. What that basically means is it's reminding investors that basically all the countries around us are slowing down, and they need to do stuff to stimulate their economies. So basically, that's just kind of a reminder that growth here, because everybody around us, and we're so intertwined that it could be difficult for us to grow as these guys struggle to grow. Sorry about that, folks. And then another note here is Draghi. He's the bank president of the European Central Bank, and he kind of indicated that with all these different forces that come into play, variables, that it's going to be second quarter will be a much slower than anticipated. Basically, you kind of phrase it a little bit differently, but it comes out that basically they're slowing down and they're not really sure exactly. It's kind of unclear with these other variables that play into from the debt problems and stuff like that where things will lie for second quarter here. All right, so let's go ahead and jump over to the bond market and take a look, see what we have in terms for interest rates. So on Tuesday we had a drop a little bit because we had some pretty good news that came in, and today, with those other news, we're kind of doing the opposite. So we're up about 105.41 on the 3.5 coupon, and we're about where we left off last week. So we're touching the ceiling on this level here, and so right now we'll be a little bit better than what we were on Tuesday, assuming that they did price for the worst on Tuesday. Most likely they did just to protect themselves. So this morning we should be getting some improvement in the interest rates a little bit. All right, folks, have a wonderful day, and I will see you guys again tomorrow. And meanwhile, thanks for listening. Have a wonderful day.